My name is Ruehmer. It's easy to remember. There's a rumor he's a Christian. That's me. I'm trying to present to you Q-Lana, our digital knowledge management platform. But I'm trying to come up with not just a presentation of the technology, because I think you all assume that our technology is working in general. I try to come up with a few theses here first about relationship banking, about SME banking, because I think while we have technology on the one side, we need to be aware that we're talking with SMEs, we're talking with entrepreneurs who may or may not be at the same level, technology level that we are, but who are actually indeed making money by doing their business. And that could be a traditional carpenter, that could be a baker, that could be a car salesman who has some idea about digitization. But in the end, for us, SME banking is largely relationship banking, and it's probably the most interesting banking service that you can offer as a financial institution to clients. It is about a specific understanding of the client, of the SME entrepreneur who looks for a financial advisor who partners with the SME in the long run. And for us, that's basically building up a relationship with this SME over 5, 10, 15, 20 years and understanding exactly what the financial needs of this SME entrepreneur are. For example, we talk a lot about assessment, disbursement, speed to market, how quickly we can disburse a loan. That's one part. And every client will appreciate if we are fast and if we're not wasting our time. But I think the more critical part is after disbursement. No loan defaults before disbursement. They all default after disbursement. And we need to be with the client and work with the client and be able for them to assess how we can solve any kind of problem that arises there. So therefore, we see a very specific role of the relationship manager in the SME banking, and we need to make sure that all our digitalization efforts consider the fact that there is still a relationship manager who services that client. Even if the client then does trade finance online or applies for a credit line online, in the end, there's still somebody working with a bank. So our first thesis is there is SME banking is relationship banking. The second part is that we will not differentiate ourselves as banks by products. All our products are largely the same. A loan is a loan, and the banking industry is probably one of the oldest sectors on this planet, maybe the first or second oldest sector on this planet, business on this planet. And the innovation on the idea of a loan, I give you money and you promise to pay it back to me, has not much changed over the last 100 years. It is the experience and it's the targeted knowledge about a sector that makes the difference. The client comes to us because we understand his business, not about the loan. Interest rates are somehow the same. We all cook with the same water. Huh? So therefore, we need to make sure we understand the knowledge, the sector better. We have expertise in what is car dealership, in what is bakery business, in what is a travel agency or anything else. That is what helps the client, not so much the product itself. The clients will, of course, demand multiple access channels. So yes, digitalization is important, and being able to apply online and having access to the internet banking is essential. But still, it is around the idea of collecting knowledge and making that knowledge available to the loan officer or to the relationship manager when he deals with the bank. And then, of course, the Fintech technologies, from our perspective, will commoditize. So what we see as an innovation here or there is actually indeed, if we're really honest, not that difficult to replicate. If anything is interesting, if any product is, any innovation that we see in Fintech is interesting or is profitable, I promise you some Indian or Chinese company will have a similar product within 3 months at the latest. So therefore, again, it is the relationship that is important. It is the long-lasting connection between the loan officer, the relationship manager, and the SME entrepreneur that provides a successful SME banking. And thirdly, we need to make sure that the technology adjusts to the users. We heard a lot about UX. We heard a lot about adjusting to the client's demands. But we cannot forget, we also need to adjust to the demands of the employees, of the loan office, of the relationship managers. Of course, we had the first panel where we talked a lot about innovation and how to push our stuff in the direction of innovation. But maybe we need to pick them up easier. We need to pick them up more. We need to pick them up slower at the level where they are. We've seen a lot of experience when we implemented our platform that it took a loan officer 30 minutes to change a password on the platform. At the same time, he changed the password on his Facebook account on his smartphone 3 times. In no time, because he somehow feels more comfortable with a social media application than with an application in the bank, because employees, as soon as they enter the bank, somehow they seem to drop the idea that innovation is possible at the workplace as well. So relationship managers need to enjoy the use of technology in order to advance the SME bank. For us, that meant, for example, when we introduced the workflow system, it's not a one-directional information flow. When somebody enters information about a client, say again, a car dealership, the system gives you back information about car dealers, gives you 10 interesting questions you should ask a car dealer when visiting him, or gives you an idea about what are the covenants that other car dealer loans have, or what is the performance of other car dealer loans, to make sure that the loan officer or the relationship manager enjoys using the platform and actually gets something back. In the same way, again, knowledge and experience is dynamic, so we need to make sure that we really have the ability to learn, and can be AI at the end of the day, but it's a lot of qualitative information. It's a lot of experience, how a certain client reacts in critical situations, how we build a relationship with the client so that if problems arise, he doesn't run away but comes to us and talks to us. Or in the worst case, if the client, say, has 3 loans with 3 different banks, how can we make sure that our bank is the one who is repaid first? Basically, by building a good relationship. Having said all that, we have built our digitalization around workflows, where we start with client business planning, and similar to what we heard from ING before, going to the way of approving a credit line, we first of all try to understand the business better. We have a business canvas tool, we have a SWOT analysis or checklist tool in there, where you can build in this institutional knowledge for the institution. We have rating and scoring, which we can configure, and we can provide contextual intelligence and knowledge management wherever the loan officer requests information from the institution that has been collected. We have the decision approval and workflow tool so that we can really allow the institution to either approve automatically or by using committees, and the intelligent decision support, so we can tell the committee the decisions that have been done in the past on similar clients so that they can see exactly how this application compares to others. Approval tracking, disbursement checklist, sign-off control, and then of course in the monitoring, early warning system, we have developed early warning tools such as early warning checklists or covenant monitoring, because again, in many banks, we still have the idea that a critical loan or a risky loan is the one who is 15 days in arrears. That's something that we have to always explain to the institutions. A loan that's 15 days in arrears is no longer a risky loan, it's a problem loan. The risky loan is the guy who pays today but doesn't pay tomorrow, and we need to find ways to analyze or monitor the clients in a way that we discover that maybe a day or 2 before, so that we can interfere and talk to the client. We combine all this with the limit management, with stress testing reporting, with knowledge management and risk reporting, as well as the regular CRM, online collaboration, collateral management, document management, and if necessary, also the ESMS reporting. It's highly configurable, it's highly adjustable for clients. We have a platform that can be now about 90% configured yourself, even though that we know that it's still in demand of the clients that we do that, or the banks that we do that. But this is something that is working right now at 4 banks in 2 different continents, and we look forward to roll out more. So part of the idea is also to be short, and so therefore I still have 6 minutes 30, but I think I yield that to my next speaker and look forward to hear from your questions.